this session. I mean, typically all sessions starts with why do this business, right? And how is it scaling? So maybe the first question to you, Aditya, is that what is this, how this segment is segregated? How large is loan against mutual fund, loan is security, and how is it scaling up? So, and then maybe you can also talk about where's the money, why should we do it, right?
Mhm. So I'll just give you a little bit of a deeper context into that question. So when we started out 50 Fin at the RTA level itself, there was roughly about 600 to 700 crores worth of mutual funds lean marked digitally. If you look at the numbers today, in under 24 months, that number has gone up to roughly about, it's inching very close to the 30,000 crore figure mark. In a 24-month timeline, that's a very impressive rate of growth. And that's how we've seen the market evolve today, where adoption has been very high, as effective on the consumer level, as is with the lender level as well. So today, if you look at the market size on the digital loan against mutual funds, there's roughly about 20,000 crores operating today. And with digital loans against stocks, there's another 10 to 15,000 crores operational today. Again, there's more and more retail players coming up over here. What we have seen in our experience is that early on, it was the retail investors, the micro retail investors that really caught on to the product. Post that, around 15 months ago, 16 months ago, that's where we saw a few of the HNI, UHNI segment becoming really comfortable with the digital process for loans against securities. And that's what's allowed the AUM to really go ahead and build at that speed. By the full collaboration of not just lenders and fintechs alike, but also the old distribution houses, the traditional distribution houses welcoming this product. That's where we've seen the AUM really exponentially increase.
Okay. Now this is good. And you spoke about this growth. Now, for doing this growth, because there is so much of movement saying that unsecured credit should be sort of slowed down, is that also positively impacting? What's the relationship you see in the market between what we generic pushback on unsecured?
No, over there, I think it was a very simple journey that the ecosystem took. Once the regulator came ahead and said and changed the risk weightages on the unsecured loans, the lenders began to wonder, if we had to get into secured credit today, what's the most efficient way to do it? And if we had to scale these new digital products to 1,000 to 5,000 crore loan book, which is the digital product that we have to go ahead and choose? So when we start evaluating LAS, in my mind today, remains the only most efficient product to launch secured credit. That is all the way from the fetching of the portfolios, lean marking of the portfolios, management of that same collateral, whether that may be checking of the pledges, unpledging in most cases, really taking forward the whole journey and communicating with the client as well. So when we started speaking to lenders and offering our solutions, the mandate that we had to work with was, how do I go ahead and scale to 1,000 crore loan book with a maximum of 2-3 people ops team at the lending house? And that's what we're really proud to say that we've achieved today.
Well, this is significant. I think half the time we get caught ki idea to acha hai, but hoga kaise? But let's move to the other side. Maybe this question is to you. I mean, there's a journey which has been built for normal lending, right? How different is the journey? Because KYC and all to hoga hi, but I mean, there are too many elements out there. And what does it take to sort of build a journey which is end to end, ensure that customer is also very, very confident with it, because there's their own money. I mean, they're throwing in the process their own money on the table, right? So there's also, I mean, lending leke to chala gaya, but yahan to main apna security deke gaya, right? So what, from an experience perspective, Rahul, what is the difference you see now? What does it make sense? I mean, how, and do you think that it is getting so simple that people are very, very easy? I mean, they find it easier to do it, right? So over to you with your thoughts.
No. So basically, you rightly mentioned, Samir, see the very essence of the journey is basically similar to the other journeys that you do, rather. But the only problem here is with respect to the underlying collateral management, right? So a lot of players, or a lot of customers rather, they are more digital savvy, and the young population that you were talking about, like somebody in the brackets of 2025, right? So they are doing actively stock tradings, they have stock portfolios, right? So how do you make journeys which are semi-assisted, journeys which are do yourself kind of journeys, where you can actually come, you can just do your KYC yourselves, do your basically collateral pledgings yourself. We redirect you to KFIN, NSDL, CDSL, and all of that places, so that the journey is smooth enough rather. So that's the whole idea basically of creating a journey. And it doesn't change much, but yes, the underlying modules like collateral risk management, seamless disbursements via LMS, once you are through with your entire journey, comes into play basically. So that's the whole idea of, creating a seamless journey. And that's where we and, 50fin have come together to pitch this product and, take this, from the scratch for any lender basically. That's the whole idea. And I think Aditya can actually talk more about the journey per se. Yeah, Aditya, what do you?
So
Maybe
I think,
it'll be good for us to understand that how are you jointly doing it, so that so wherever maybe Lentra is there, you can move fast, or wherever you can jointly do it faster
yes,
for the client.
Yeah.
for sure. So I can just, I'll just take this question into two parts. The first is, if it's every lender's desire to have a really seamless journey for this product or any product for that matter. But when it comes to LAS, one thing that we have to recognize the reality is that there is the overarching infrastructure, that is, let's say, a CAMS, KFIN, MF Central, NSDL. In first party pledge, there is CDSL. And each of these tech stacks, think of it as they're talking their own language, and your LMS is talking a whole other language. So where we really see the seamless journey being built is by building logic around it, which we have done over the last 2 years. We have tested multiple times, experimented, failed and succeeded in those same attempts, and making sure that trying to understand the smaller points about where clients are getting a little bit more apprehensive. What do they consider a seamless journey? More often than not, what a client considers a seamless journey is not the same as what a lender considers a seamless journey. So a very simple example over here is that when early on, we used to see that clients didn't know how many units that they had to pledge for the loan amount that they wanted. Right? Maybe I want a 1 lakh rupee loan, and I may have the portfolio that's eligible for that loan. But how many units of my mutual fund to pledge? How many shares of Reliance, of Ultratech Cement do I really need to pledge for this particular credit product? And that's where simple innovations like using slider bars, prorating the required lien across different assets, really working with the lenders and the consumers gets us to that seamless journey. But one thing that Lentra and we have done together well is that when we see this new product evolving, it's most important to have a really new age configurable dynamic LMS, and within it a one-stop shop for LAS. So what I mean by that is having a really think of it like having very good roads, that is your LMS, and having very good markings on that road is your collateral and risk management system. And that's what by Lentra and 50fin integrating together, coming in as a bundled solution, lenders are able to easily take us and take LAS live at the earliest.
Okay, excellent. Maybe maybe slightly deeper question on the profiling of the customer, right? And we spoke about that digital business has just started last 2 years, whereas the physical one existed, I think, much larger there as well. So I think, do you see because we've seen that on even in digital payments and everybody has picked up, right? So do you think that the whatever mass exists today on the physical side will also move on this side? And if that happens, how big can the market be? And what is the change in profile of the customer? And if in India, there's the amount of money which is in the mutual fund and securities is extremely large, what is the size of the market can it explode to?
Correct. So over here, there's the first question on that was the demographics, or at least the client profiling. One thing I can guarantee you is the client profile that used to access a physical loans against securities is completely different to those who are accessing a digital loans against securities. Previously, on the physical side, historically, LAS has always been a HNI and a UHNI product in India. It's a very old product, nothing new about it. But it was primarily tier 1. It was primarily the UHNI, HNI class that you used to access it. Today, if I can, more than speculating, I can tell you about my own data. From the 50fin app, our embedding partners as well, 1 out of every 2 loans, 50% of our entire AUM generated has been from tier 2 and tier 3 cities. Something that, it sounds very unconventional to the average lender when thinking about this product. But the penetration of equities today in the Indian market is significant. We've really underestimated how SIPs have really reached the last mile consumer, how the ease of transacting in the capital markets have really allowed the tier 2, tier 3 city portfolios to grow to what is today a very considerable level. So that's the major shift. I think that's really coming up. And more importantly, today, now that we have lending partners with us who are already live, who are willing to give a 25,000 rupee loan, a 20,000 rupee loan, 15,000 rupee loan against securities, that's where you're just increasing the spectrum that much more on how many more portfolios end up eligible into this new credit product. And that's why we've seen the demographics change quite rapidly. I think when we started itself, it was very skewed towards, let's say, men between the age of 20, 23 and 40, primarily residing in tier 1 cities. Today, if you ask me, I think roughly about 15% of the loans are taken by women. 50% of all loans come from tier 2 and tier 3 cities. Tier 2 and tier 3 city portfolios are equally matching tier 1 city portfolios. So that's where we've seen the market really evolve.
No, this is really good. This is really good. And maybe the next question, maybe you can jointly answer. And I don't want to go into specifics. And this is more to say that if somebody wants to get into this business, uh, what do they need to do from start, right? Because as I see so many participants here are in early stage of setting it up, right? Because otherwise, why would they come on these sessions? Either done it or they're not done it. So if they're there, what is it? From where do they start? What kind of teams they have to build? And yeah, and normally एक डर लगता है कि बहुत महंगा होगा, right? Normally when we get into any new business, and normally any of the banking platforms do tend to get very expensive. होता ही नहीं है, right? So 36 months and the platform is not live. All those issues you have heard. So practical stuff बताओ. And maybe jointly you can figure out, you can pass the button as you require.
Right. So
And the pointer to everyone, please raise your questions. We will ask all these questions, and if some of these questions are not answered, and I'll ask them blatantly to the panelist here. क्योंकि मेरी जिम्मेदारी नहीं है, जहाँ पे मेरे को पता होता है मैं बता देता हूँ. Okay, I always tell what I know, but this is the area of something we have not worked on, so I don't have much of clue. But we'll ask those questions. So please keep sharing your questions. Yeah, over to you.
I think the first thing that I can tell that you need to do when starting class is either send me or Rahul an email. I think that will be the best thing that you can do. I'm a little
And
bit.
the direct sales, okay? No direct sales, okay?
That's a little bit of a biased answer, but I think the first thing that everyone needs to do is just really understand the technical requirement of it all. So first get what we're willing to achieve as a lender here really right first. Are we looking at the retail segment? Are we looking at servicing our wealth clients? Are we looking at everybody into one simple click to borrow solution? What's the kind of solution that we really want to put out over here? Post that, that's where actually 50% of the matter is solved, because basis that understanding, it gets easier, or it gets much easier to really go ahead and devise the product. We have all the journeys, like whether that's for a client, an IFA, an RM, and RM assisted journey, embedding stacks via micro web apps and APIs. We have all of those stacks between Rahul and I. But when the client really knows what they're trying to achieve with the product, that's where it's so much easier to give the solution and get live much quicker. I can give you, for example, before giving it off to Rahul, we have had within the same quarter, 2 NBFC cases that went live with us, and where we went live in under 6 weeks in both of those projects. So if the client really knows that they want to take this product live, and what kind of clients they're hoping to service, and what's the kind of product that they want to deliver, it's that much quicker to go live. But Rahul, if you want to elaborate.
Yeah, no. So you rightly mentioned, and the safest part and the quickest part is because since we have the entire stack from onboarding till the loan lifecycle management, the quickest part for any lender to start off with is start with mutual funds, because that's more integrated with KFin. You can actually turn around in quick time, and we are there to help you with respect to end-to-end offering, right? So yeah, that's an addition that I wanted to have. Yeah.
Oh, this is good. This is good. So I think at this point of time, why and to all the then why we are getting specific is that normally we don't get into very specific at any point of time, because you may feel awkward, but because this market is yet to be built. If we keep it a very high level, maybe sometimes you may not pick it up. So I think Aditya, it will be good if you could quickly spend maybe next 3-5 minutes to demonstrate the platform and how does it work, because I'm also as inquisitive as everybody else. So I'm technically asking what I think people should know. Over to you guys, and quick demonstration will help, and it will help us into understand कि journey कहाँ से चालू होती है, screen
Yeah.
customer कैसे दिखते हैं, वो क्यों करना चाहता है. Maybe you can start from a customer journey first.
Yeah.
That will ease off the pain point. I mean, I'm also thinking because मैंने भी किया नहीं है, so just like take it through forward first.
Sounds good. So I'll just go ahead and show you two very quick snapshots of how a journey can look. One thing that if everyone can keep in mind, that when a solution like this is delivered, we deliver it completely in your colors, completely white labeled. I hope you can see my screen.
Yes.
Perfect. So over here, the client comes in, accesses a portal, an LOS journey, just like in any other most of the digital products. And on a simple sign up, they'll be accessing a view to choose of one out of two products. That is either a loan against mutual fund or loan against stocks. One really interesting thing that we've seen lenders do today is say that no need to have two more products, just call it loans against securities. And let's go ahead and fetch all the portfolios and give a combined LAS out of one go. Irrespective of the configuration, both are available, either a loan against stock separately or a loan against mutual fund. But let's say, for example, loans against mutual fund, client comes in, checks the eligibility. You're going to have a fetch coming in first from MF Central. That's going to give us the detailed report. Today, what we have is, let's say, on our own portal. This is my own portal that we are showcasing. Today, we have multiple lenders who we source for. And let's say that this particular portfolio for this client is accessible to these two lenders on the screen. All we can go ahead and do now, see the offer, click on the particular lender, and go straight into KYC for that lender. So we'll be taking most of the lenders out there today. We'll be having a DigiLocker fetch, liveliness check via selfie, and a VKYC. Most of the lenders ask a few additional details. Depending on that particular lender, we go ahead and configure the screen for the client. And we move straight into pledge. On the pledge side, this is where, Samir, I was just mentioning to you that early on, 1.5 years ago, we saw a lot of clients facing an issue saying that, boss, I want 50,000 rupees worth of loan, but I have all of these mutual funds and I don't know how many units that I really need to pledge. So one simple thing, just go ahead, use the slider bar or put in the rupees quantity that you want in terms of loan, and the required pledge is prorated from your largest value holding scheme to your lowest value holding scheme, irrespective of client. I'm talking tier 1, tier 2, tier 3, HNI, UHNI, retail. Every single 9 out of 10 clients end up taking this recommendation. So we've seen this work really well for the clients. And then
I think normally people will think, but this data, I'm a lender, right? How does this fetch happen, and how much time does it take to fetch this data from these platforms, right? Because when these guys are doing this implementation of account aggregator, I think there's a lot of challenges. So typically, how much time does it take to actually fetch the data online?
It takes roughly it's less than 5 seconds to go ahead and fetch this. So the CAS API, the Consolidated Account Statement API, is, I think, the best functioning out there in the market today. If not MF Central, CAMS, KFin, all three of them are doing it very well. MF Central just works best because instead of 2 OTPs, you can do it in 1 OTP, just reducing the friction for the client.
One API gets you all the data out there, and then later on when we do the pledging and all, then the second one will come in, right?
Exactly.
Okay.
Exactly. But one thing that I really want to make clear over here is that when any of our lenders, we take them live, we make sure that we fast track your empanelment with MF Central, CAMS, KFin, NSDL, whichever of the depositories and RTAs are required. We fast track them, make sure we get your credentials registered at those RTAs. So whether it's from the fetch to the pledge, all of them are done under the lender credentials. So the securities are fetched in your under your name and also pledged in your favor.
Okay, and just to everyone, I know there's a bunch of questions coming up and some from friends as well, right? So just hold on. We'll take all questions. In fact, I am planning to stop all my questions. I'll take your questions only. Okay, let's go.
Sounds good. Over here, once the client is happy, reads the mini key fact statement of sorts, they will go ahead and see the entire details of the loan, the KFS, along with the repayment timeline. And once they're happy with that, they'll continue to pledge. Although MF Central was coming in for fetch, we'll go ahead and do CAMS and KFIN independently for pledge. And this, on confirmation, the client will be able to see what mutual fund schemes, how many units have been pledged. We can see the key facts of the loan over here. Because it's an OD facility, you'll have a drawing power functionality. So the client can take a minimum amount and keep the remaining of it unutilized for another day. And just to avoid any more friction into this, because we have the integration with the RTAs, we do get the registered bank accounts at the folio level. So the client can just go ahead and click which bank account they want the money dispersed into or link another account. In any case, we do a fuzzy name match, penny drop verification as well. And post that, we'll get into agreement signing, OTP. And the last will be your e-mandate. E-mandate will be only for the interest payments because it's an OD facility. It's not a term loan or an EMI-based facility. It's going to be only the interest payments. Principal payment can be paid at any time. So next time the client comes in, they see an active loan tab. They can click on active loan. They know that last time they had a 50,000 rupee loan, they only withdrew 40,000. So they have 10,000 rupees available. They can avail that right from here. And they can also check their transaction history across the entire loan. We built this in a way where you can go ahead and allow the client to fetch their holding statement, account statement. And also the really interesting thing that we've done over here is when you're making a payment towards the principal, you can either make a part payment or what's really cool is we allow a pay now and unpledge. So when you do pay now and we have a positive response that the client has made a successful payment via the payment gateway, straight into the lender's account, of course, the client can immediately select for that same payment how much units, how many units is eligible for unpledging right now. And they can make that configuration, type it in that I want these many units of these particular schemes unpledged and send the unpledged request straight from here. So that's the kind of system that we've gone ahead and developed. The flow remains roughly the same for loans against stocks. The only difference is that unlike the OTP being put on a native screen, NSDL allows you to put it on a web view of sorts, just like how you would enter your TPIN when you're selling your securities in a very similar way. But that's the gist on the customer journey. On the back end, when you're a lender.
And just one question. I think I know we could have, but I mean, this is one of the last questions which have come, but I thought it's linked. This question is from Nishit. He's asking that the process of pledging and depledging of securities is fully digital and frictionless. Any operational challenges do you face? I know I'm linking it, but I thought we can close it right here.
So with mutual funds, it's completely frictionless, right? It's fully digital, it's fully seamless. We integrate all of the APIs into this portal that you're seeing now on the screen, the collateral management system. When it comes to stocks, once the pledge is requested, it will be before 10 p.m. that night when the broker has to confirm the same pledge. The unpledge again will be taken forward by the NSDL's PD system. Not too many challenges over there, but not as seamless as the mutual fund side.
Yes.
Yeah.
Oh, excellent. Just one question. If this is again the last one from Yamini, she's asking if you are unpledged, does it reduce the credit risk, credit limit of customer?
Definitely. So that depends on the lender's credit policy. What we've noticed is that most lenders are sanctioning the loan at between 47 to 50% loan to value. And only if payment is made towards the same principal, they'll go ahead and allow you to unpledge to the extent that your loan now comes back to around 50% or 47% loan to value.
So Samir, since it's a collateral-based loan, so whenever you unpledge collaterals, we reduce the limits. That's given.
Perfect. So, what are you going to show now? Quick view, because we understood the customer journey.
So now this is the other side of the mirror. Basically, this is what the lenders will see. Again, for any of our lending partners, you'll be having a completely white labeled experience over here. But on logging in essence, lenders, their ops teams, their admins, business heads will be able to see what's the total number of portfolios that have accessed my LOS. Out of those portfolios, how much have I pledged? What's my loan value? What's my shortfall amount across my loan book? My mispayment amount? How many users? How many loans do I have? What's my active AUM at this particular amount of time? and track this across loans against stocks, loans against mutual funds independently if you want to do so, and track this across certain time periods as well. But one of the most important things that we've seen lenders use is our script level exposure. Let's say, for example, today, 18% of your entire loan book is exposed to Nippon India small cap. The risk team will most likely go ahead and reduce underwriting for that particular ISIN. But it's about just simplifying what is really a very complex product. Over here in loan details, apart from your generic, let's say, LMS functionalities of seeing the sanctioned loan amount, shortfall amount, interest rate, PF, and whatnot, you'll be able to see the DTP, the drawing power to loan percentage. So it's really configured for your OD facilities. If the client comes in and says that I have all of these shares and mutual funds that can be pledged digitally, but I also have this one ISIN code that's in CDSL. Today, CDSL does not have a digital pledge. And maybe the pledge is large enough that you want to take it physically. You can get the pledge process done physically, and ops team can just come in and add a pledge, and the limit can be enhanced. Very, very simple process over here. But it's actions like this where, depending on these RTAs and the APIs really performing, and also the validity of the portfolios, we can go ahead and track how many portfolios for this client was partially pledged, was it fully pledged, was the pledge rejected for some reason. The pledge tracking is what we provide. And when you're operating at scale, along with what we've seen across our partners, a lot of our partners are really pushing for massive, massive scale on the retail side. When you're operating at scale, when you click on loan actions, it basically compresses your entire loan book and says, these are the loans, these are the loan account numbers that you need to take an action on today. As per the regulation, just a little bit dive into it, RBI mandates that a minimum of 50% loan to value has to be maintained and a maximum correction time of T plus 7 days is allowed. So over here, the traditional LMS does not calculate what the shortfall amount is or how long that shortfall has been active for. So let's say this particular client, you can see over here that the shortfall amount is X rupees and it's been T plus 7 days. We can go ahead and take an action right from here, right?
And that includes liquidating whatever we have. That is also possible?
Exactly. Exactly. Yeah. Liquidation and unpledge completely from the same portal itself. I can just show you that a little bit more detail in risk management. When I show you here on your approved lists, apart from maintaining the same risk of the client and that particular land, what we have seen is as soon as the lender takes digital LAS live, their business team already is speaking to around 10 fintechs to be an LSP for the same product. The core issue in LAS is that the approved list of scripts is going to change more often than you think it will. Every month or so, the risk team might go ahead and take a call saying that we are no longer underwriting this mutual fund scheme or this particular script. In that same time, by the time the last LSP or the last distributor knows about it, there's a lot of cases which would have come into the matrix. So very simple for lenders here, go ahead and upload a CSV and immediately all the APIs will be updated either on the LOS or on your embedded finance side. And what's really where we come one level below that is we allow you to set for each share or mutual fund scheme, you can set a client limit and a global limit across your loan book. So let's say, for example, you on Axis Small Cap Direct Fund, you don't mind giving 50 lakhs per client, but you will not take an exposure greater than 500 crores at a loan book level. Whatever those numbers may be, they can easily be just edited over here and saved, and that will be updated along the entire tech stack. You can showcase that in terms of percentage as well. Let's say you don't want more than 10.
No, let's not get into too much detail. We'll end up with a full demo, right? I think the concept had to be understood.
But that was, I think, the major parts of the demo I wanted to show. One thing that I'll go ahead and say is the last thing is the most used, apart from, of course, the core functionality, the most used part of the entire dashboard is actually the MIS reports. What we've seen is ops teams love the ability to download shortfall data, loan book exposures, reports, state-wise reports, loan book and disbursement details. But this seems to be a great value add. But that in essence is the combination of these two portals, just in effort of time.
No, brilliant. Thank you. And the questions are coming at a very rapid pace, right? I think I'll start taking some of them. So I think first question which has come from Rajiv. Rajiv is asking a question that what are the regulation implications related to NRIs, because उनका कुछ अलग होता है ना, PIS ऐसे कुछ करके होता है. I remember implementing long back in my banking days. So how does it work for them? Or is it right now up and running for NRIs, or is it yet to be done?
No, so it is as of today, it's not allowed for NRIs. You'll only be looking at permanent resident Indians.
Okay, perfect. Lohit was asking question that the rates of PLR 10.5, then LAS is also 10.5. Why should customer opt? So I think it's not a straight answer. The point is those who are getting 10.5 and those who are getting 10.5 on secured, maybe two different profiles, right? So I think it's a scenario. I run a MSME business and I'm not a salaried class. My typical rate will be, I think, anywhere between 14 to 18% if I was lucky enough to get it. And the process can also be very, very painful, right? They will ask my kidney as well for pledging there, right? So the process is very tough. I've done it. I've taken a loan of 20 lakhs on my home, and it took me 26 days to get it. I think I've been talking about it for long. So let's just ignore that for a moment. This is the segmentation issue.
Yeah.
Yeah. Sorry.
Plus,
Go ahead.
plus another thing is that, in personal loan, there's a limit to get an unsecured loan, right? So in this, there's no limit, right? At the same rate, basically. So you might as well, if you have portfolio, you can go in for a loan against security.
No, makes sense. Makes sense.
Correct.
Okay, so let's go. I think Purav, you had a lot of questions, so I'll maybe you can raise hands. There's also some hands, so I just try to make it interactive. Otherwise, you'll obviously get to see some new faces as well. So be there. If you want to raise your hand, you come out. You can. Otherwise, just let me see who has raised it. So I think we have Rajkumar Vijay who's raised hands. I'll try to give him a right to speak. Let's see. So go ahead and ask your question, please. Yeah. Rajkumar Vijay, please go ahead, and you are on mute if you want to ask a question now. No? Then I think I'll jump back. Let's continue with the questions from, let's say, Purav. Purav asking, would PMS funds also come under the gamut of LAS? Is it feasible today to secure loan against PMS funds? If not, what is the roadmap? I think my sense it's a bit too far. I think it has to first get digitized. So maybe you want to take it because digitization is still to happen.
No,
And that also shows that Purav is rich, okay?
Yeah, I can tell you my exact pain point over here. Is it possible? Yes. Can it be done digitally and efficiently? No. And is it the fintech or the PMS at fault? No, it's actually the custodian in the middle. So that's what we've really faced when lien marking for PMS funds. Non-discretionary funds can be pledged and taken a LAS on it. More often than not, it's an incredibly tedious process. It can only be done physically today, roughly about 20 days stat on those products.
Okay, excellent. So I think there are a lot of questions on risk management side.
Yeah.
Maybe one of you want to take a question on risk management and how the whole collaterals are managed. So anything which you want to share, either of you can respond.
So I think before Rahul, if I can go first, on the risk management part, it's been evolving significantly last 24 months. Before, let's say, for example, with the first lender that we digitized, it was a very simple structure, a risk policy where in case the market was to tank, we have a black swan event tomorrow. At a certain LTV percentage, you can go ahead and square off the entire loan book and we write an algorithm for it. But today, all the way from your underwriting to risk management, completely lenders have gone far more detailed. Let's say, for example, one of our lending partners gets into a categorizing of buckets of securities. If I am a client and I have 3 blue chips and 5 mid caps and 20 small caps, how do I categorize that bucket as red, yellow, and green? And for those same categorizations, how do I manage the risk of it? If a yellow bucket was to fall by 10% in the same day and LTV has crossed 80%, should I go ahead and liquidate it? We've seen all of these things really come into play, but that's one part of the risk management evolving. The second part is automation. I think lenders today have got more and more comfortable in really allowing fintechs like us to automate the entire ops of the product. So let's say, for example, I'm a client, I take a loan, tomorrow morning market fluctuates downwards. We go ahead and send an auto communication. We track those auto communications, post that on no reply from the client. Let's say on a T+8 day, we can go ahead and if it matches a certain LTV bracket, we'll automate a liquidation trigger as well. So all of these processes, including unpledged, partial invocation, revocation, we've seen lenders really come in and allowing fintechs like us to automate it for them. Whatever may be their risk policy, we don't get into it. But whatever you're willing to automate, we are more than happy to do it.
Yeah, Raahul, go ahead.
Yeah, and as rightly mentioned by Aditya, and it calls for a very deep integration with the underlying servicing platform as well. Of course, collateral management and risk management plays a very important role, which Aditya mentioned. I just want to add a couple of things there, which I and Aditya were speaking about last time. How do you categorize, say, for example, stocks, whether something is high beta, something is low beta? How do you, allocate LTV percentages across those stock scripts rather, right? How do you leverage on third-party data like Bloomberg, NSE, 𝐒𝐜𝐚𝐥𝐢𝐧𝐠, right? So just to make sure that you give right feed to your lender, basically, or your customer, your client rather, to take actions accordingly on the portfolio. So it could be T plus 7 days for recovery, but do they want to liquidate beforehand? And if they want to liquidate, how seamless that process is basically, as far as reducing the limits, as far as reducing the loan exposure, selling the securities in the market basically. Right? So all of that basically is all part of CMS, RMS, which is risk management, collateral management, and LMS put together. Yeah.
Excellent. Excellent. I think Ram, you were trying to ask any question, some question, right? And I thought I'll give, and just to Ram, I think you can ask your question. Just one sec before Ram, you start. I think for everybody who's joined, if you have any query on this specific topic, was this very few people know about this topic. So we have guys who knows stuff. So please do share your feedback. The link is already available out there on webinar chat. So go ahead and share your questions there, your pointers there, and give us feedback. We'll come back with maybe have more sessions on secured lending in this segment, many more. In fact, it's a series. Last time, I think a month back, also we did a secured lending that was on LAP and HL. We will do more on auto and few more areas as well. So please do give us feedback so we can take it forward. Thank you. And Ram, go ahead and ask your question, please. And welcome on the other side.
Yeah. Hey, Saveer. Hey, Aditya, hi. Quick question. I have a bunch of questions, but I'll start with the fact is you talked about the MIS, right? Where you define the limits have been defined at exposure, all those things. I'm just thinking about the both. So fundamentally, do you provide ability to identify exposure across borrowers, right?
Yeah, definitely. So we do that today with all of our lending partners.
No.
Across lending partners, across clients and cohort of clients.
Now, see, one is basically being able to report, but do you also have the action to trigger off? So let's say like whatever Vodafone happened or JM happened a few years ago, right? At that point in time, you pretty much are, if it is in a, so you want to make a call to basically either ask for a demand. See, one is demand. Second is a flip. So one is basically from a collateral perspective, I can say was, okay, the stock is fell down by 20% to 30%. Ask for more units or stocks to be kind of pledged, right?
Correct.
But given the fact that you have do you also have so that's the most common one, that is a traditional class, right? Where you only ask for additional unit stocks to be kind of pledged, right? Okay. But given the fact that today you have all these cash APIs and other things like that, do you also have the mechanism to say that I don't want to pledge more units, but I want to pledge other shares of equivalent value?
Definitely. So we have that already accessible to us. Either pledge the same collateral, any share or any collateral that you want. As long as it's in the lender's approved list of scripts, client will be able to fetch and pledge instantly to go ahead and correct that LTV shortfall.
Okay. All right. And this is a bulk action across, across borrowers?
Definitely. Bulk action across borrowers.
And is this largely triggered by staff, or is it something which is rule-based, saying that if a particular portfolio is kind of, basically your fund, right? Fund whichever is there, or a stock is falling by so much % consistently, trigger of a automatic thing.
So we have both the options. Either you can go ahead and manually do it via lender operations, or it can be automated. So that we leave it to the lenders. Each lender seems to have their own way of their own comfort in that respect.
That's nice. A slightly different question. Now, obviously, given the fact that LAS is not very common and most LMS, LOS does not support it, right? Two sets of questions here. One is at LMS overall portfolio of a trust ID, right? I mean, especially in the context of even I'm assuming in an NBFC today, they might have a PL and on a different system versus this thing, right? LAS on a different system. So do you provide, I mean, like, how do you kind of do the customer, unique customer identification and this thing? And second is, do you provide APIs by
अरे
which?
राम इतने सारे क्वेश्चन हो जाएंगे तो मैं आपको कनेक्ट कर दूंगा, okay? Don't
हाँ,
worry.
चलिए.
So maybe
So,
one last question, yeah. तो मैं
yeah,
कर
no,
रहा
just this part. How do you kind of, I mean, do you have mechanism of reporting? I mean, because there'll be multiple LMSs typically in all these scenarios. How do you kind of provide reporting? Do you provide APIs to consolidate across systems exposure of a particular borrower?
So you are talking about a limit management which sits on top of
And Rahul, I'm not talking about limit management. I'm just talking about pure MIS to say that I have a borrower who's got a personal loan as an NBFC, correct? I have also implemented your platform. Okay, now these both the LMSs are not the same one; they're independent LMSs,
yes.
correct? So then, if I want to kind of just understand what's my repayment history of the customer, of the borrower, all those things, right? On the typical MISs at a borrower level, not at a product level, but at a borrower level. Are there APIs exposed?
Yeah, I mean, yes, definitely. The LMS will expose APIs for the borrower, which are there in the loan against security LMS, and will be able to provide data. Now, consolidation needs to happen somewhere because the data is coming from multiple sources and multiple LMSs, which is where I was just referring to a limit management or a customer management system, which sits on top of all the LMSs. Right. So because loan against security LMS is only one LMS that you will have for loan against securities as a product portfolio. Yes, but then if you have a common LMS which can cater to other line of businesses other than loan against security, then definitely a customer ID would be common, but they would be having multiple loans from multiple products.
Thanks.
Thanks, Ram. I think so. Ram, till now, yours remain the most popular session which we did. Actually, 4 years back with Orpheus, we had done a session on how to build a digital NBFC, and I think it remains the most popular till date. Right? So, thank you, Ram. Okay,
Thanks,
so
Amit.
yeah, let's continue with this. I think let's say which other critical questions. Now here there are two regulators involved. There is a RBI involved as well as you have obviously SEBI. So how do you those players, because many of the lenders have never dealt with the other regulator, right? So how does it operate? Do they need to what kind of key regulations they have to focus on? Any of you can answer this question.
So at least in this product, that's a question that we used to face quite often as well. As long as it is any form of credit product, whatever the collateral may be, RBI is the overarching authority, right?
Yeah.
And the only thing that lenders have to focus on is the RBI master circular on LAS, nothing else.
Absolutely.
No, this is interesting. This is interesting. There's a very straight answer. Do I see more? Nishit, you have been asking a lot of questions, so maybe he's very operational. How is equities data getting fetched? I understand MF Central is used for fetching MF data. So I think my understanding is they have direct integration with NSDL and CDSL, right?
Correct. So there are three ways to do this. One, either you have what we do most common is of course the NSDL integration that will be going ahead and fetching your entire NSDL demat securities, whatever may be there, and we show it to you on the screen. The second is going ahead and doing, if for example, there are certain NBFCs that also have a securities division in that same NBFC. We have digitized similar NBFCs in that structure, and their securities house, their broking house will be empaneled with CDSL. So they are allowed to do a first party pledge. For example, X finance will have X securities. So then you can do a first party pledge and give a LAS on those securities. So those APIs are available for CDSL. Although CDSL does not have third party LAS APIs. The really efficient new way of doing it is doing account aggregator. Do an AFH, store all the securities. You know which security is coming from NSDL, you know which are coming from CDSL, and then go ahead and configure it for lien marking. Then you can just pick out the NSDL ones, do the OTP on NSDL flow. The CDSL you can take offline if that's something the lender wants to do.
Excellent. Excellent. I think there's also, again, maybe the same questions are coming back. It's coming from Ashlesh. Maybe you want to summarize it again. How, I mean, maybe when we started, maybe some of them would not have joined. The market size कितना है, growth कितना है, and typically average credit line कितनी होती होगी, kind of stuff. So just give a quick view again. Because I see these questions coming again and again and again.
So I think the best way for me to summarize it would be that last 24 months, we've seen roughly about, 20% month-on-month growth. It's been, that's because the technology was very, very new. And we've seen the entire market adopted. That's on supply and both supply and demand side of capital. Today, you can say that digitally, they've combined roughly about 30 to 35,000 crores worth of digital LAS running, that is loan against shares, loans against mutual funds, routed digitally. That's the operating market. Growth perspective, it's going, I think last year, the market itself, grew multifold, but this year we expect at least a minimum of 35 to 40% growth with just the key players who are coming into the fore.
No, perfect, perfect. I think to each one of you, many of you are asking more details about these queries. I think my request to you is, again, in this session, we may not be able to cater to it. Please do give us the feedback. Interestingly, not too many guys have filled up, right? So I wouldn't know how to reach out because there are so many questions coming up. We may not have picked up all of that. I think, so let's say somebody is building this whole piece out and goes through the whole implementation. How do you scale from there, right? Because how do you target the customer, right? Because you don't know. Let's say my customer set is, say, I'm a lender and I have, let's say, 100,000 customers with me. When I'm starting the business and as we go forward, how do I know the potential? Because normally when you do it, we target customer, bureau pakad ke apan customer ko target karte some data. But how do I start targeting? Do you think that many of these players will also get into account aggregator framework, get data before we do it? I mean, just trying to figure out how do you find that customer now, because its underlying has to be known.
100%. I think the really good part about this is that I think lenders have been positively surprised as to how many of their clients really have exposure to capital markets. That's been the entire wake-up call that's happened in the industry right now. With lenders that we have taken live, they had projected, for example, just to give you a figure out there, 100 crores worth of immediate potential line that could have been created from a set of their users. When we actually went live, looked into the data, almost a half of their entire loan book had exposure into capital markets in some way or the other. So either you were getting into stocks, you were getting into SIPs, you had made a one-time purchase into a mutual fund scheme and you had just kept it there a long time ago. That was the real shocker that came to lenders. But how to scale the book? What the first part of the question there, Samir, is that there is your captive audience, and then there is the remaining of India. And the remainder of India, to reach out for less, if you go ahead and try to do a performance marketing, digital marketing, it's going to work out. The CAC is going to be very expensive, right? That's why B2C fintechs in this industry have not done too well. But on the reverse side, one thing that we have seen work really well is embedded finance. So today, if anyone over here is a Motilal Oswal, for example, investor, you would have received a few WhatsApp messages in the last, I think, 2 months saying take a loan against mutual fund. So our embedded stacks allow distribution houses where there's a point of sale to go ahead and do this. Whether it's there, Bajaj Capital, in FiMoney, we have our embeddings as well. As many high volume sourcing points as possible. I think the largest highest we've seen is Paisa Bazaar, with their crores of clients really sitting. They themselves were surprised on how many people had access to mutual funds. So there's a very, very large scope. But when there is a stack available to get into embedded finance like this, which is what we promote to lenders, which is what we enable for lenders, that's where it really makes sense from day zero. Because you'll have captive audience estimate, you'll have embedded finance, and that's when you understand that, yes, I can make money from the get-go.
And very practical question, right? Because in NBFC world or a bank world, when you launch a new product, there's a lot of thought process, karna chahiye, nahi karna chahiye, and there's enough policies at the bank level, pata nahi kya hota hai, right? And the credit guys may not have been exposed to this. So what is your journey saying that when people believe, because tech is not the barrier here. I think the building the product and rolling out and thinking about it, saying that how do we control the process and all. So what's your take? What does it take for a let's say NBFC of say 5,000 crores to get into this business, because you have met so many people, and what kind of policy changes are required to get on board? And maybe both of you can answer that question.
Sure. Raahul, if you want to go first,
Yeah, so I'll just talk about tech because tech is one of the big barriers if you seriously ask me. And I'll just talk about certain challenges from the perspective of underlying tech, which is actually missing, because this being a highly liquid product, liquid collateral based product, still the underlying tech is not there to actually help you manage your risk properly. If you seriously ask me, now what are the challenges that are basically faced by the lenders in order to actually go ahead and start this kind of funding? Basically, one is the missing configuration capabilities, right? The product capabilities, like if you want to launch products like loan against ESOPs, right, which are bridge loans. In order, if you want to exercise your ESOPs, you want to take bridge loans to exercise it, right? How do you give those configuration parameters for only doing ESOP financing, or loans against mutual funds, or loan against securities? The underlying tech platform, specifically LMS, how do you actually make sure that the product construct is more revolving in nature, so that I can come, I can go anytime, I can draw down, I can repay it back depending on my margins and the underlying collateral value, right? What is the seamless integration? So there are no seamless integration up until now, until we came together, us and 50fin put together. There was no seamless integration as far as how do you do risk management via the likes of Bloomberg's, NSE, 𝐒𝐜𝐚𝐥𝐢𝐧𝐠, basically. How do you make sure that your script-wise, categorization is there? How do you, enable the operations guy to take a decision on what needs to be liquidated or not, right? So these are certain tech angles which were actually which are still a talking point, where a lot of lending institutions, they fear to actually venture into this kind of lending per se, if you ask me, because of underlying tech capabilities. I mean, that's one of the things. Policies and everything you can really work around, because this is a very straightforward product if you seriously ask us, right? But tech is an underlying challenge as per our understanding. Yeah, over to you, Aditya.
I think that's completely right. Because it's a 50% LTV product secured by liquid collateral. This is one of the few products where we don't face too much barrier from credit teams. We're kind of welcomed into the office more often than not. So it's much easier to look at it that way. And I think the internal teams have been evolving in their thinking. Before, it used to be as, what is this product? Should I be first into the industry? Then internal teams started changing their philosophy into, okay, I need to get the best digital product out there. How do I really do it well? Today, they're much more advanced in thought, saying that, this is a really good product as a treasury management tool. If I have surplus cash, this is a 50% LTV product, highly liquid collateral, and I'm automating the entire collateral management of it. I should be deploying it into this product primarily. So thinking has evolved significantly in the product.
Excellent. Excellent. Maybe just one question which I just saw. They're saying that NBFCs are obviously come in. So what is the market share of banks and NBFCs? And are the banks really getting excited? That's from Ashlesh Sonje.
So I think banks are excited today. They've been excited for the last quarter and a half. So it's great to see the banks coming into the mix. NBFCs rule this market, right? I'm talking about 80%, 85% plus being the really NBFC market share, and the remaining being with the banks. That's primarily because the RBI restricts a maximum of 20 lakhs rupees per client. And that's why banks initially weren't incentivized to go ahead and attack the product, thinking that this is a UHNI kind of product, but they're restricting me to 20 lakhs, so I should not get into it and try to scale it. So now that banks are saying that NBFCs are ruling this game, and the significant chunk of it is coming from retail, they're really waking up and coming into it today. But hopefully we will be taking our first bank and first small finance bank live over the next 60 days or so.
Excellent. I think before we close, maybe from both of you, your perspective, you think about me as a bank, me as an NBFC, or me as an aggregator of customers, where like a Paisabazaar, I have a lot of customers. What will be your thought process? Why I should get into this business, and what would it take to do it? And what is the money, right? I think a lot of times money is the starting point as well, right? So a quick one before we close.
So I can answer, at least from my perspective over here. On the aggregator side, on the fintech side, it's a no-brainer. You want to have as many seamless digital products possible so that you can own the client, right? From the real large aggregator level, it's a no-brainer there. On the NBFC front, today it's the one product that we have available that's as this is both for NBFCs and banks, as low capex and as low opex as possible for you to get into secured credit. It's appreciated by the regulator. Internal teams love it, and it's one of the few places where collateral can be lean marked and managed completely digitally hands off, right? So that's what that's where the key value add comes in for the banks and NBFCs. For the fintechs, large aggregators, it's a pure product play, and it's a great revenue pool as well.
Excellent, excellent. Rahul, from your perspective.
No, as rightly mentioned by Aditya, one thing that I wanted to add is basically that see, loan against security is of course there's a market available, and the major chunk is with the NBFCs and the banks is basically having a lowest chunk. But we also have to consider MTF, which is already happening in India. Zerodhas of the world, Upstocks of the world, they are doing margin trade funding. But the use of those kind of funds are basically limited to doing trading itself, right? So what loan against security provides is basically you pledge and you can use the funds as per your requirements, rather, right? Another thing is basically the rising market valuations in India. It actually presents a significant opportunity on the back of very strong Indians, India story to explore loan against security as a product. Of course, the downsides and the limitations are basically to the tune of tech capabilities. You need to have a robust LMS, collateral management, credit management, and risk management as an underlying products to manage and let you minimize the risk. Is the essence basically, and that's where we come into the picture together to help you set it up from the very scratch itself.
No, perfect, perfect. I think this is good. And thanks to all the participants who were there. I think who have stayed along with us. We obviously will work on more on these areas as we go forward. For us as an organization, also this is an area of new opportunity, new business models, and we also are seeing a lot of people in the market reaching out to us on secured lending as well, right? So I think be it on loan against shares or lab, which is loan against property. I think there's a movement generically visible there. So I think we are very very keen. So I think with this we close now. Thank you all the participants to being there. And I mean, so many questions. I've never seen that many questions coming. I'm like so surprised. I don't know, some 30 odd questions came out today. So thank you guys. And to Aditya and